Hello and welcome to our latest Insider interview. Today I'm joined by Georgina Brittain, who is fund manager of the JPMorgan Mid-Cap Investment Trust and the JPMorgan UK Smaller Companies Investment Trust. Georgina, great to have you today.
Lovely to be here.
So Georgina, UK equities have been out of favour for quite a long time now, and we've seen over the past 2 years the mid-cap and small-cap part of the market particularly hurt by the increases in interest rates that have been taking place. So what needs to happen for things to get better? What needs to change?
This is the multi-billion-dollar question that we're all asking, and we are obviously being asked a lot. I think I would say two things on this. So first of all, as you say, mid and small in particular, I mean, the whole UK market's been out of favour, but in particular, mid and small caps. And our view is, and you know, proven by past data, this area of the market is seen as a barometer of the UK economy. So people have been extremely worried, obviously, that we were going into recession, that our inflation was absolutely out of control and higher than elsewhere in the developed world. And de facto, that's reflected in what happens to mid and small caps. They just rampantly fall out of favour. It is our belief and our hope, and again, past history suggests this will be the case, that when interest rates peak, obviously the corollary of that is that inflation really does look like it's in hand, still falling and coming under control. This will be our time in the sun again.
And in terms of valuations, the entire UK market is undervalued compared to its own history. Are there any areas or sectors of the market that you would pick out that are trading on unjustly cheap valuations?
Well, first and foremost, as you said, the entire UK market is very cheap, and definitely that is true of mids and smalls as well. Mid cap, I can give you specifics. So the PE on the market, the FTSE 250, is circa 11 times. Normal, by which I mean the last 20 plus years, is 14. So a very significant discount, and smallers will not be very different. We're not focused on sectors. We are very, very much bottom-up stock pickers, and I don't mean to be unhelpful, but we are finding ideas everywhere, each day, and it really is almost a question for us, because we're very fully invested, of sell to buy. So you really need to be feeling very strong conviction about new buys in order to sell something from the portfolio.
And could you talk us through some recent portfolio activity in terms of new holdings that have been introduced to both investment trusts since the start of this year?
Absolutely. So as you'd imagine, very much we have both within the portfolios. If I start with mid cap, some new things that we put in. So in the last a year or so, Mitchells and Butler. So again, it was very clear that people, like I said, people were going to want to go and eat. People were going to go and spend their money, spend time with friends in a nice pub or bar. We hadn't held the company because it's very clear, again, there were massive headwinds for companies like this in terms of inflation of all of their costs, from their electricity to their staff to their food to their alcohol. So we waited until that calmed down, and we believed that would peak before we bought in. So Mitchells and Butler would be one. Inchcape, the car distributor, would be another one. We really like the global deal, the huge deal they did, I think it was back end of 2022, and we think it's incredibly undervalued given the strength of the franchise. So that's just two examples of new additions to the portfolio. And then absolutely we've added to various names. Some may surprise you. So we've very much added to our house builders, which seems quite counterintuitive given what's going on. But, our job is not to invest given on the background of what's happening today on the macroeconomic background. It's to look at, where we think things are going over the next 18 to 24 months and get in early, especially something like house builders, where you've got the assets, you understand that pricing is coming down, life is difficult, let's put it mildly, for the house builders. But we know that there's a significant shortage of housing in this country. And we know that margins will come back and prices, at some point will come back. So, and then in terms of our smaller companies investment trust, again, of course, we've been adding to certain names, and we do that just to take advantage of stock price volatility. If we really like a name and the shares have fallen for no reason, you'll tend to see us adding to positions. But in terms of new names, again, there've been a few this year. A couple of them are mentioned. So one is Card Factory. So again, clues in the name, the card retailer. And again, a theme I mentioned before, very clearly, some of the other card retailers are struggling and publicly struggling, whereas Card Factory had been in a very difficult position. New management came in. There's been a very significant turnaround. And again, they're winning market share. So Card Factory would be one. We also bought back into a position in XPS Pensions. So the clue's in the name. They do pension consulting and pension administration. And their market is booming. So we're pretty excited about that one as well. And then the third one I'll mention is quite a more recent purchase a few months ago, is a small position in a small company called hVivo. And this does, I need to get the phrasing right on this, but it does human trial testing for new vaccines. We think it's a very small market at the moment. This is quite new. Obviously, human trials is going to be new, small, and very highly regulated. But we think, and it's actually the global leader, this very small company. But we think this is a market that's really set to expand. So we, as I say, we're watching and waiting. We've got a small position at this stage.
And of course, as well as the UK market being cheap, the two investment trusts that you manage, they're trading on discounts of over 10%. So that offers an avenue for private investors to buy the UK even cheaper.
Absolutely. I find it hard to put into words, how cheap a lot of the opportunities or a lot of the stocks we own are, and then add on the type of discounts that both our investment trusts are on. So you're getting incredibly undervalued assets, in our view, on an even greater discount. There's a lot to be said for that.
And in terms of the UK's weighting in the MSCI World Index, we've seen the UK's weighting decline quite notably over the years, and it now only accounts for 4% of that index. So how would you make the case for UK equities at the moment?
Great question. So I think a couple of points I would make on this. So first and foremost, I come back to valuations. We all know, buy low, sell high is the way we make money. Is the way we earn money, is the way investors make money. And we're very low. I can't pretend I can say we're at the bottom clearly, but we are very, very cheap, which is always a good starting point. Also, I believe part of the reason the UK market is so cheap is exactly to your point, that over the years, especially a lot of the larger discretionary wealth managers, have been reducing their and indeed the insurance companies have been reducing their exposure to the UK very significantly. So that's been a massive headwind to the UK stock market. At 4%, it's hard to believe it goes much lower, especially because, say that's the index weight. Now, if you lay on, cheap valuations and what we hope, is an end of selling, when people turn around and start going, oh, this is really cheap, and the UK actually is not the basket case that people were calling this time last year, and actually the economy, is not in this just terrible state that, again, a lot of people were absolutely sure it was. When people start buying, they're going to find it's hard to buy and things go up.
And finally, a question we ask all fund managers: do you have skin in the game?
Yes, indeed. Yes.
Georgina, thanks for your time today.
Pleasure.
So that's it for this episode. You can check out the rest of our insider interviews on our YouTube channel, where you can like, comment and subscribe. Hopefully, I'll see you again.